What's up, guys? What's up? How you doing? Want to talk to you about any mortgage questions that you might have. Had a little time, not going anywhere. It's blazing hot where I am, so I was like, you know what? Let me go live. Let me see if there's any questions, and answer them for you. As always, the answer to all problems in the economy, in your economy, is you must make more money, right? That is a must. There's no ifs, ands, or buts about it. So if this offends you, sorry, but it's the truth. So we're not going to talk about all of the reasons you can't buy because, again, those reasons are answered, solved. Those problems are solved by making more money. I know people don't want to hear that, but it is what it is. If you don't want to make more money, you have to limit your expenses. But there's only so many expenses you can limit, right? Because regardless of what you see on all of these platforms, there are a shortage of homes. Facts. There's a lock-in effect with people that were on the property ladder and were able to get crazy interest rates a couple of years ago. Okay. Builders are very smart, and it's almost like they have a monopoly now. They're not making as much money as they made over the last 18 months, but they're still making money with the incentives that they're given. They're just cutting into some of their profits, but it's still record profits. Nothing's free for all of you that think you're getting a deal. Trust me, it's baked in the cake as far as incentives and things of that nature. And as long as you know that, cool. But again, the answer is making more money. And folks don't want to talk about that. So we like to talk about reality over here on this channel, so that we could really help you prepare to win with real estate. Okay, because honestly, honestly, now really is the time to buy. For all of you out here that are gurus and things of that nature, you know now's the time to buy. It's not easy in that you're going to have to make more offers. But if you're truly an investor, or if you're truly looking to purchase a home, now's the time to do it. And respectfully, I'm not speaking to those of you that need 100% financing and things of that nature. The market, the only thing different for you is the interest rates, your payment chopping. Okay. And that's fine. But you have to understand where you are. And you have to understand that real estate is a long-term investment. Long-term. And you cannot look at your purchase like a options trade. If you're doing that, then you really shouldn't buy, and you have to educate yourself much, much more so you can understand the basic literacy that you need to have when it comes to money and or investing. So minimum, you should be looking to live in your home, minimum, in my opinion, 7 years. If you're not willing to or able to commit to being in one place for that period of time, or if your life circumstances don't call for that, then you're going to have to find another way to make sure that you're not giving a lot of money towards a rental situation and take the difference, right? The the arbitrage between a home payment and what you're paying in rent, and put those money somewhere where it could grow. And this is where I always come back to owning a home, because a lot of you guys out there are 40, 42. Okay, you've been waiting and things of that nature. How much money have you saved? How much money have you put in an investment vehicle? Most haven't done anything. So owning a home is it's a forced not only savings, okay, if you could pay it off, but it's in most people's balance sheet, it's the largest asset that you'll have. Okay, I know there's been a renaissance, if you will, over the last couple of years with this financial literacy, but a lot of you guys are getting taken even in that. So, anywho, you must make more money. That's the answer. You also have to limit your expenses, cut out the fluff now. That's what time it is. Okay? Everybody's doing that. Business owners, billionaires, everybody's looking at the balance sheet, getting rid of the fat. You have to do it too. Okay? And you have to be aggressive. You have to make moves. Now, if you can't afford to buy, then you should. Okay? I'll say that over and over again. So now, I'm going to move forward here. I got this question, uh, and I want to kind of try to, not try, but I'm going to explain it to you from a consumer standpoint. Now, this is how we as lenders make money. Okay? You are not going to see this. This is done on the back end. And this is just a pricing structure, okay? Has nothing to do with interest rates. Interest rates are determined by several factors on a daily basis, okay? So, with that said, I want you to understand that typically the advertising, the marketing that I've been hearing here recently is that brokers are better, right? That's marketing. That's cap. Okay. Uh, Bankers or mortgage bankers, these are companies that exist that don't deal with making money from deposits and things of that nature. They originate mortgage loans, bottom lines. And they have several investors that they can sell loans to, all right, after the origination is done, as well as FHA, VA, USDA, and conventional loans. Okay. Most bankers also have the ability to broker. So that's why brokers aren't better. Then you have your big banks, right? Your Wells Fargos, your B of A's, and your Chases. Okay. Now, what I will say when it comes to the big banks, respectfully, the service is horrible. And anyone who has purchased or borrowed money to purchase residential real estate from a large bank, if you're not someone that has a large amount of cash deposits in said bank, the service is horrible. It just is. Okay. That's why mortgage bankers exist, because banks got smart and said, hey, we're going to outsource the function of originating a mortgage loan to a specialty mortgage bankers and or brokers, and then we'll buy back the servicing rights, okay, where you make the payments. Because again, how do banks make money? With your deposits. I digress. This is what you need to know on a daily basis, regardless of the investor, okay? You have rate sheets that come out, and interest rates, what's baked into these rates are all of these lenders' fees, okay? Fees for running the operation, compliance, employees, insurance, overhead, the whole nine. And you're going to run anywhere. There's a range, obviously, from zero. There's still some folks out here making 5%, okay? 0 to 5%. And depending on who you deal with, broker and or mortgage banker, not so much the bank is captive, Those loan officers make very little. Why? Because they have a captive audience. The bank says, hey, we bring people in, we're going to give you a little slither. A lot of times they're W-2 employees. That's why the service is horrible. It's kind of like the government, respectfully. So, mortgage bankers, mortgage brokers, somewhere on this continuum. And your interest rates, as far as the cost of that money, not the said interest rate, because these interest rates here are dictated by market factors. Okay. Uh, I won't get into that. I'll just stay here. Let's keep it simple. So now, the amount that you might have to pay for these rates vary based upon these entities' compensation structure. Okay? They're all not equal. That's why I tell you all that it benefits you to get at minimum one extra quote. Let me digress at that point. Guys, be an adult when it comes to getting quotes, respectfully. What do I mean by that? If you have a loan estimate and you're going somewhere else, if you don't want to waste a lot of time, just show the other entity the loan estimate. And if you're dealing with a legitimate place, like myself, I'll let you know off the bat if that's something that we can offer better for you or not. It's not like buying a car and wait, back and forth and going to back and see your manager. You're just wasting time. Be upfront, okay? Uh, just recently, I told a young lady she was looking to get a home in Houston. She's a veteran. Bank of America, no, Chase has a program for veterans that are buying in certain zip codes, and they were offering like I think $9,000. Go get it. I can't help you. I don't have that option. I don't have that program. However, what you're not going to do is call me every 5 seconds because the service is horrible. The loan officers don't know what to do. So if you're going over there, you got to go over there to get the money. You got to understand. But that's my point. Just show the loan estimate, and if you're dealing with a legitimate company, loan officer, lender, I'm not about wasting time. If we could do it, we can. If we can't, we can't. So with that, when you're shopping, more times than not, taking additional monies out of the mix, okay? And in that scenario that I just gave, why is Bank of America, why is Wells Fargo, why are some of these banks able to give some of this CRA, community reinvestment money? Because they've broken some rules and stole some money somewhere. And then the government, CFPB, comes and slaps them on the hand, right? And makes them reinvest in the community. That's why they're in certain zip codes. A lot of times it's tied to minorities. But as long as you understand that it is what it is, okay? They're not giving you that because they're great folks. They got caught with their hand in the cookie jar, okay? So these rates come out. On any given day, you have a par rate. Par right here is at 100%, okay? At par, whatever the associated rate is on that given day, you can get that rate and you don't have to pay any discount points. You may have heard it called points or buying down the rate. Okay, that's your par rate. You don't have to pay any. Now, what folks have put out online and trained people and things of that nature, well, if you're short funds to close or if you need a little additional help and you're not getting it from the seller and things of that nature, you may be able to increase your interest rate, whatever that rate is on that given day on that scale, and everything above 100, okay, that percentage times the total loan amount you can get as a lender credit to help lessen your cash to close. Okay. Now, certain programs have FHA has a minimum required investment at 3.5%. If you're not getting grant monies or monies from qualified sources. So you have to meet a certain threshold, but that's how it works. Anything over 100, it's a premium. you get that difference to help lower your closing costs. Conversely, anything less than 100, okay, as you can see here, I have the negative numbers, right? Those are a cost to you. Same thing, you take that percentage and multiply it times that total loan amount, and that's the cost it would cost you to get that rate on that day for whatever lock period that you lock in. Okay, so that's how lenders make money. Okay, that's how lenders make money. And I used to be from the standpoint, and I still kind of am, because my compensation plan, I have a very lean compensation plan. I always have, because my mindset is I want to work on volume. I want to work with people that understand efficiencies and professionalism and mastery of products, and that have systems in place that can get you from point A to point B as smoothly as possible. And so they'll pay for that service. Okay. And so I don't have to charge as high. I don't want to charge as high to try to just make a killing off of folks. And that's just not my nature. No disrespect to folks that are. Most of your brokers, okay, they're making 2.75%. Now, that's their business. Okay. That's their business because they might have staff. Everybody has overhead and things of that nature. I just run a real lean shop. Okay. I run a real lean shop. And so there's nothing wrong with that. But you as a consumer have to realize that there's a cost. It's not free. Nobody, you just flip it around and we come to you and say, okay, I want you to work for free. And then you give me your check and the services that we're seeking for. So you see what I'm saying? Nobody wants to do that. Your job is to understand how the pricing structures are as far as the cost, right? And then how to look at a loan estimate. I'm going to do a video on that. And the only thing you need to look at on the loan estimate is the first section, section A, the first section, because those are the only costs that the lender can control. And then that's where you do your comparison shopping. But for a lot of you younger folks, listen to what I'm saying to you. Depending on where you are in these United States, and we lend nationwide, your closing costs are going to be anywhere between 6% on the low end, Mississippi. Who else? Louisiana. Might even be 4% of the purchase price, up to 10% of the purchase price. And that's just for a standard FHA, VA, USDA, or conventional loan. If you get into some of these down payment assistance loans and things of that nature, could be more than that. Okay. But just keeping it generic, 6 to 10% of the purchase price. Let's do a little math. $300,000 purchase price. Okay. 4%. 4 times 3 is 12. 12 grand. And that 12 grand includes the down payment, the closing cost, and your prepaid items, the establishing of your escrow, taxes, and insurance. Okay. And so all of those costs aren't associated with paying vendors and things of that nature. Some of those costs are associated, a third of those costs are associated with you establishing your escrow account with your taxes and insurance. And that's a hot topic today because taxes and insurance are up. That's why it's very important for you to get qualified and deal with someone that really can communicate to you the truth and not what you want to hear. So 300,000, low end, that's 12. 10%, that's 30 grand. And it's has nothing to do with the interest rates. If you're at par, okay, you're always seeking for the par rate or anything above that rate or the lowest rate that you could get that's going to give you a premium. Okay. Now, sticking with these rates, I'll kind of come back here. How do you know? How do you know if it's a good idea for you to pay today's dollars, money that you have in your hand, just to get a lower interest rate? Just went over this Friday with one of our clients, and long and short, par rate was 6.625% on the FHA loan. Okay, and somewhere he got some information of about 6.375%. Somebody gave him that information, but what they didn't tell him was that there's a cost associated with getting that rate. Because you can buy down on the scale. I mean, on Friday, when I looked at that FHA rate that in this example, I think the lowest rate on that rate sheet was like 4.75%, but it costs like 9 points, right? 9% of the sales price. That's the part that they don't tell you. That's what I'm explaining to you. So, as I explained to them, hey, I'm going to show you the rates at par, 6.625. I'm going to show you that scenario, a real scenario with the taxes and the insurance and the HOA, okay, FHA, as well as at the he said 6.375, my rate sheet to match that 1% that they didn't tell me you would have to pay. I could go as low as 6.25. Okay, but after all that said and done, when you look at the principal, interest, tax, and insurance payment in that scenario that I'm talking about on Friday, it was only a $75 difference. Okay, so you have to ask yourself, look, am I willing to give up whatever X amount of dollars? Okay, and in this case, what was it? Like $5,200, decent sized loan. Okay, are you willing to give up $5,200 today for a $75 a month decrease in payment? Now, for most people, the answer is no, because your buying power with those dollars today are should be more than they are in the future. If you don't understand that concept, just pull up a inflation calculator, calculator.net, pull up an inflation calculator and put in $100 and see what that $100, the purchasing power of that $100 was in 2000 compared to today. You can't buy as much today as you could in 2000 because of inflation, the silent killer, right? So after educating the client, he made the decision, you know what, I understand now. I make enough money to where $75 a month really doesn't make sense for me to get off of $5,200 now. I could put that money somewhere and have it give me a greater return, because $7,500 in the grand scheme of things, not $75 in the grand scheme of things is not a tremendous amount of money. And in most cases, most of you on that side think that, hey, if I'm going from 6.625 to 6.25%, man, I'm going to save a lot of money monthly. And the answer is no, because you're not factoring in the taxes and the insurance. You see? And I know you don't think it might be that way, but I'm not saying rates are going to go back to 2%. We don't want that. That's why a lot of you can't buy now. Okay? You've been priced out because there was a shortage of homes even then. And the Fed, in my opinion, didn't do a good job because they artificially kept those rates low. And you see what happened. And home prices have not come back down to where they were even in 2019. And they're not because there's not enough homes. I digress. So you have to understand that the odds of rates coming down over the next 2 years are greater than not. I know you don't think so, but they are, because of the way the system is set up. Can't stay like this forever, right? But getting on the property ladder today, you can benefit from inflation because assets benefit in inflationary environments. And so at the end of the day, it goes back down to what I was saying in the beginning. So you got to make more money. Because if $75 is a deal killer for you, two things are true. One, you shouldn't be buying a house because you can't afford it. Or two, you're buying too much house and you need to come down on that scale. And there are houses that are out here that you can afford. You may not want them, I understand. Well, then you got to make more money. Or You have to say, you know what? I'm going to find a different way to limit my living expenses and take the delta, the difference, and put it somewhere to grow while I'm waiting for my opportunity to get onto the property ladder. And don't fall into this syndrome of finding a group of people, right, that believe like you believe and think you've been slighted, and 20 years pass by and you don't never do anything. Or you don't understand that all these folks on YouTube telling you the market is crashing. You know, they've been saying that for 4 or 5 years now because they're in business to get your attention so that they can generate an income from ad dollars. If you listen to any of them, they tell you the same. I see a guy on YouTube. Uh, the Fed has just made it possible for you to get rich. It's the same headline every day. And then when you get on there, he's talking about absolutely nothing. That's the lottery mentality. Educate yourself. Educate yourself. Educate yourself. Educate yourself. Because if not, ooh wee, ooh wee. It's Sunday, right? I'm still minding my business. Okay. I won't let anybody. Okay, I'm not a fake. I'm not a fake one, and I'm blessed. All right. Uh, Jeff Bezos and is it Jeff Bezos and Musk and who's the Facebook guy? They still work every day. That's a poor person's mentality, right? So you have to produce. You have to produce. So with that said, I don't see any comments or anything. I'm gonna leave this on. You guys leave me your comments about what I said. Got to take the kid gloves off. A lot of you guys out here need to be startled and waking up. Wake up. You don't have to buy anything. Okay? The choice is yours. But we all are going to be held responsible or accountable for our decisions. Asset prices benefit in inflationary environments. And last I checked, unless you want to, be a minimalist, most folks want shelter. Okay? And if you think, don't listen to what people are saying, watch what private equity is doing. Because they know if they keep indoctrinating you, you won't be able to buy in a minute. And then what do you think rents are going to do at that point? When they know they have a captive audience. You think you're crying now. Okay? I don't want that to happen for you. Again, not everybody. We're at about 62, 65% is the highest percentage of homeowners. Everybody's not going to be one. But if you one of those 6 out of 10 people and you've been kicking the rocks, get with somebody, get a plan of action, and you may have to get rid of that $1,300 car. It's crazy to me. I don't know how y'all paying $700, $800, $900 for a car. There's cars out here that's less, but that's your business. Okay, buy now, pay later is egregious. I'm starting to see that everywhere because you guys are thinking you're getting away because it doesn't come up on your credit until you have an additional amount of bad credit. All of these credit cards that are blowing up in this business credit, and you don't have a business, y'all wake up, man. Wake up. And if that's not you, I'm not talking to you. But a lot of you guys, you know what I'm saying. Okay, you're putting yourself in a bind. I don't want you to be there. Reach out. Reach out. Look in the description. Schedule a consultation. Find out where you really are. And if you're someone that can buy, reach out. Let's look at the numbers. Put a plan of action together for you so you can make your decision off of reality and not this social media. Hey, man. Robert Lewis, NMLS, license number 180100. If you like content like this, hit the subscribe button. Enjoy your Memorial Day if you have the day off. And most importantly, be good to one another. Let grace abound. and we'll talk to you soon. Peace.